Okay, for this example, I want to go over a sample 8938, which is a statement of specified foreign financial assets. So this is generally required by U.S. persons, whether they're living inside or outside of the U.S., or certain U.S. domestic entities that have interests in foreign financial assets. So I do have the 8938 in front of us, which we'll go through, and it is part of a larger return. So it's a full 1040 for our taxpayer here, John Q. Taxpayer. So we'll go into all of these items in more detail. But in addition to this, I do have one slide that covers some of the general background on the form, some things you need to be aware of, and then the fact pattern itself that we're going to be working with. So the first thing to consider is, are you a U.S. specified person that even has to file this? And then what are the filing thresholds? So the reporting thresholds are laid out in pretty good detail in the instructions. They basically vary based on your filing status. So if we're talking from an individual's perspective here, the individual's filing status, so whether they're unmarried, married filing a joint return, or married filing a separate return, and then your residency, right? So are you living inside the U.S. or are you outside the U.S.? So for those of you who are U.S. citizens and expats living abroad, you still have U.S. filing obligations because you're a U.S. citizen, but your filing thresholds are going to be different than if you were actually living in the United States. So for our individual taxpayer unmarried filing thresholds, I've got the 2 bullet points here. But obviously check the 8938 instructions if you are married or married filing joint or married filing separate, because there's going to be different standards. So if you're unmarried and you're living in the U.S., the value of your foreign financial assets, if it's more than $50K on the last day of the year or it's more than $75 at any time during the year, then you have to file this 8938. Now notice how much it changes if you're living outside the U.S. So if you're a single filing taxpayer living outside the U.S., the value of your foreign assets is more than $200,000 on the last day, or if it reaches more than $300K anytime during the year, then you have to file, right? Now, what's reported on the form? So you have to ask yourself, what is a foreign financial asset that I might have abroad? So this includes foreign deposit accounts, so bank accounts, savings accounts, custodial accounts. So you think of those as your brokers, right? So if you own stock and you're holding it in a foreign custodial account, let's say a UBS account in Switzerland, that's got to be reported. And then if you have all other interests in other foreign financial assets. Now, what's unique about the reporting is we try to eliminate duplicative reporting. So if you have foreign assets that are separately being reported on a different international information return, so let's say you have a foreign trust with a 3520, you have a PFIC, which is an 8621 filing, 8865s for foreign partnerships, or if you have a CFC, let's say, and you do a 5471 filing, you don't have to report the information again on the 8938. There's a section where you indicate that you've already reported this, and you mark the number of individual returns that you filed. And I'll show you in this example how that's done, because that's going to come up for our taxpayer here, John Q. Taxpayer. So let's look at the fact pattern, and then we'll get into the 8938. So John Q. Taxpayer, so he's single, unmarried, filing taxpayer, and he lives full-time in Florida, right? So he's a U.S. resident, and so he's going to be using those filing thresholds. So John has the following types of foreign assets and investment income connected to those assets that he's got to disclose on his tax return. So the first item there is John has a foreign bank account in the Cayman Islands. And so the maximum value of the account during the year reached $205,000. And then the amount of interest income that was paid on the account is $1,209. Now, these are all U.S. dollars. So if you do have foreign currency, you have to convert those using the appropriate exchange rate. But for this exercise, we're just using U.S. dollars in the fact pattern itself as well. Now, the second item there is in May 2022, John invested $25,000 into a hedge fund entity in the Cayman Islands. So this is an offshore feeder fund in the Caymans, and the hedge fund investment is classified as a PFIC. So For all the U.S. investors in there, they have PFIC reporting obligations. So John uses the information that the hedge fund provides to him to complete the 8621, and he makes a QEF election on the 8621. Now, it's this reporting that, again, we're going to try to eliminate the duplicative reporting, right? So he's going to do the 8621, which is definitely required, and then he can indicate on the 8938 that this is an investment in a foreign corporation, which is held for investment purposes, right? And so that is a other specified foreign financial asset, which would otherwise have to be disclosed separately. But in this case, because he's doing it on the 8621, he can indicate as such on the 8938. And then the last one here, for a couple of years, John's been a 2% shareholder in a foreign corporation in South Africa. And so this entity operates a local manufacturing business. It's majority owned by residents of South Africa. And John's the only U.S. person, and so they do this analysis to make sure, okay, it's not a PFIC, there's no other U.S. persons here, it's not a CFC, and then John doesn't meet any of these other categories of filers, right? He's not an officer, a director, or anything like that, and so he doesn't actually have to do the 5471, but because it's an investment, so he owns stock issued by a foreign corporation, and it's held for investment purposes from his perspective. It is another specified foreign financial asset, so he's got to disclose it. All right. So, and now also during the year, he received a gross dividend distribution. There's a payout. His allocation was $2,500. That's in U.S. dollars on November 1st, 2022. But the company withheld foreign taxes. So, because this was a payment to a non-resident of South Africa, they had to withhold tax on the distribution. Okay. All right. So now let's look at the form itself, and then we'll start going through these pieces one by one. So the 8938 name shown on the return. So John is an individual. So this is a U.S. specified individual that's filing this. It's not, it's not a partnership or corporation. So we've got John's name, his tax ID number, and then so part 1 and part 2 is where we separate the deposit and custodial accounts, and then these other foreign financial assets. So the foreign deposit account, we've got one account. The maximum value of the account was $205,000 and no custodial account. So this information is coming from the second page, right, in part 5. So part 5, we list the detailed information on those deposit or custodial accounts. So the first account here, it's a deposit account. Enter the account number, and he does indicate that the account was opened during the tax year. Now, if you have no tax items that are being reported with respect to the asset, you can check this box here. That's not the case for us, right? Because remember, this is a savings account that he has that he earned about $1,200 in interest, so he's going to have to be reporting that interest income on his tax return. So we leave that box unchecked. $205,000 is the maximum value of the account, and for these purposes, we're assuming that it's a USD account held by this foreign bank, which is quite common these days. You don't have to use Cayman dollars and no KYD if that's not what you want to use down there. So he's got a U.S. account, so no foreign currency exchange rate. Everything is just done in dollars, so it makes it easier. And then enter the name of the bank, right? So Cayman Islands Offshore Bank Limited, the mailing address, the street address. And then if you do have the GIN, you can enter that there. You don't have to, right, because it does note that it's optional. But you can look this up on the IRS website. So the IRS has a FATCA portal where you can look up foreign financial institutions, hedge funds, other kind of private equity vehicles that are all registered and have GINs. But John's decided to leave that off. Okay, so that's the first one that's being entered there. Now the second piece is going to be the other foreign assets, right? So the other foreign assets is that 2% interest held in the stock in that foreign corporation. So part 6 is where we enter detailed information on those other foreign assets. So the description of the asset here, let's say John holds 2,000 Class A common shares in that company. And then it does ask us to complete all that apply here, right? We didn't acquire it during the year. We didn't dispose of it during the year. He's held the stock for a couple of years. And again, we're not checking box D because John received some dividend income from the company. So he's going to have to disclose that on Schedule B, pay the tax, and then there was also that foreign tax credit element there as well. Now, maximum value of the asset during the year. So he's just, you should be using the fair market value, right, of the stock. Obviously, if it's a closely held company, that's not easy to do, but John thinks the value is around $23,000 so in dollars, and so the 0 to 50K is appropriate for him to check there. And then he did use a foreign currency exchange rate to convert to dollars, right? So the local currency there in South Africa, the conversion rate, and then the source was the U.S. Treasury. So the box 35 is where we enter information on the stock, right? So if the asset reported on line 29 is stock of a foreign entity, enter more information on the company. So name of the business, it is treated as a corporation, right, under local law purposes, and it would be for U.S. tax purposes. And then the mailing address of the company, right? So that's those pieces there. Now, what about that PFIC, right? So the PFIC, and I'll come back to part 3. I want to do the PFIC first. So in part 4, this is where you would enter information on if you had reporting done on other informational return forms, right? So the PFIC investment in that hedge fund was reported on an 8621. So if we scroll up here really quickly, the 8621, this is a PFIC investment in this offshore feeder fund, right? This hedge fund based in Cayman. And so John has completed this as required. He's entered all the information in part 1 on the entity. He's made a qualified electing fund, so a QEF election, and then he's done part 2 as required. So all of that's fine. All of the income is being reported on his return. But now that he's done that, he doesn't have to re-enter it in, let's say, the other foreign assets summary page, right? So it doesn't have to be reported again in this part 2 section, okay? So once all the information is accurately reported here in part 6 and part 5, if you have multiple accounts, you'll just add additional sheets, right? And then you total up all the amounts, and then they're reported here as a summary in parts 1 and 2. Now, part 3, right? Tax items attributable to these assets that are reported on the tax return. So the first one is that Cayman Islands savings account. So the foreign deposit and custodial accounts section, we had $1,209 of interest income that came from that account. And so remember, U.S. taxpayers, you're reporting your income from whatever source derived, whether it's foreign or domestic, and you have to effectively pay tax on it. So what we've done on Schedule B, if I jump up to Schedule B, we can see here in Part 1, the interest, we've reported the interest income from that offshore bank, right? And we've also reported the dividend income from that South African manufacturing business. And so when you complete the 8938, after it's reported on your return, you have to indicate kind of what line item and what schedule it's flowing to. So in the foreign deposit and custodial accounts, we've indicated $1,209 of interest income is being reported on the 1040 and specifically Schedule B, Part 1. It does ask, it says schedule and line item. Schedule B, Part 1 doesn't have separate line items, right? It's just a bunch of blank lines. So in my opinion, I think this is sufficient. This is a sufficient disclosure to let them know that, okay, it's being reported on Form 1040. We attach Schedule B. It's in Part 1 because it's interest. That's good. And then the same goes for the dividends, right? So we have dividend income, $2,500. It's being reported on Schedule B, Part 2 for dividends. That's fine as well. And then the withholding tax. So there was a credit, a foreign tax credit available on this dividend distribution, and that amount, again, was $375. And we were reporting it on Form 1116 for foreign tax credits, and it's being listed in Part 2, Line A. Okay? So that covers it for this video. I hope that was helpful. If you have any questions, leave me a comment below. Always happy to answer as many as I can get to. And I look forward to seeing you on the next video. Thank you.